Hello, and welcome back to Boni's Life, your essential guide for navigating the beautiful, chaotic, and often downright baffling world of cryptocurrency. I'm your host, Boni, and today we're rolling up our sleeves and diving headfirst into the digital trenches to make sense of the current market madness. Whether you're a seasoned trader who dreams in candlesticks and Fibonacci retracements, or a newcomer who still thinks blockchain is a new type of Lego, we've got something for you. The market is a sea of red, and the air is thick with fear. The big question on everyone's mind is, are we officially in a bear market, or is this just a healthy, albeit terrifying correction before the next explosive leg up? It's the $1,000,000 question, or in the case of Bitcoin, the $78,000 question. Well, we're going to dissect that question from every conceivable angle. We'll put on the glasses of a short-term scalper, a mid-term swing trader, and a long-term hodler. We'll crunch the numbers, analyze the news, and explore the technical setups that could define the next few weeks and months. By the end of this episode, you'll have a much clearer picture of where we are, the forces that brought us here, and the potential paths that lie ahead. So grab your coffee, silence your notifications, and let's get into it. All right, let's start with a bird's eye view of the crypto landscape. As of today, February 3rd, 2026, the global crypto market capitalization is sitting at a hefty $2.71 trillion. Now, that's a number so big it almost sounds fake, like the number of times I've promised myself I'll start going to the gym. But what's truly fascinating is the mere 0.2% change in the last 24 hours. The market is in a state of suspended animation, holding its breath. The 24-hour trading volume is around $144 billion, which tells us there's still a lot of activity, a lot of buying and selling, but without a clear, decisive direction. It's like a high-stakes poker game where everyone is waiting for the river card, and the pot is getting bigger by the second. Bitcoin, the undisputed king of crypto, is currently trading at around $78,200. It's been a brutal week for Bitcoin, with an 11% drop over the last 7 days. Its dominance in the market is at a very significant 57.6%. This is a crucial metric, as it means that over half of the entire crypto market's value is in Bitcoin. It's the sun in our crypto solar system, and its gravitational pull dictates the weather for all the other planets, or altcoins. When Bitcoin sneezes, the altcoins don't just catch a cold, they get pneumonia. Ethereum, the queen and the backbone of DeFi and NFTs, is trading at $2,292. It has been hit even harder than Bitcoin, down a staggering 20.9% over the week. Its market dominance is at 10.2%. The rest of the top players have also taken a significant beating. BNB is down 12.2%, XRP is down 14.6%, and Solana, a favorite of many, is down 16.6%. It's a sea of red out there, folks. But as any experienced trader knows, a sea of red can also be a sea of opportunity. It's when the blood is in the streets that the smart money starts to look for bargains. Looking at the broader market, we see some interesting dynamics. While the top coins are bleeding, we have some outliers. Zilliqa is up a whopping 64.7%, and Limitless is up 56.9%. This tells us that even in a downturn, there are pockets of strength and speculation. It's a reminder that the crypto market is not a monolith. It's a complex ecosystem with its own internal currents and tides. Understanding these nuances is key to successful trading. So, what's the story behind these dramatic price drops? It's not just random market fluctuations or a sudden collective decision to sell. There are some powerful global forces at play here, a confluence of events that has created a perfect storm of fear and uncertainty. First, let's talk about the elephant in the room, the broader economic sentiment. We saw a significant risk-off event triggered by, of all things, Microsoft's earnings report. Their Azure cloud revenue growth was a little underwhelming, which sent a shiver down the spine of the AI-driven tech market. When the tech giants stumble, the ripples are felt everywhere, including crypto. It's a stark reminder that in our hyper-interconnected world, no market is an island. The hopes and dreams of the AI revolution are intertwined with the fate of the crypto market, for better or for worse. Then we have the political chess game, which is always a source of drama and intrigue. President Trump's nomination of Kevin Warsh for Fed chair has the markets on edge. Warsh is perceived as being more hawkish, favoring a tighter monetary policy. This nomination sent shockwaves through the traditional markets, leading to a massive sell-off in precious metals, with silver having its worst day ever. And when traditional safe haven assets like gold and silver get hammered, it creates a wave of uncertainty that spills over into crypto. It's like the financial markets are a giant Jenga tower, and someone just pulled out a very important block. The whole structure is wobbling, and everyone is holding their breath, wondering if it will all come crashing down. And let's not forget the ever-present regulatory storm clouds that are always gathering on the horizon. We have the Genius Act aiming to regulate stablecoins, and the CFTC looking to get more authority over crypto markets. The White House is holding meetings with banking and crypto executives. This is a classic double-edged sword. On one hand, sensible regulation can bring legitimacy to the space, attract a flood of institutional investors, and protect consumers. On the other hand, heavy-handed or poorly designed regulation can stifle innovation, create new hurdles for businesses, and drive the industry underground. The market hates uncertainty, and right now the regulatory landscape is a giant, blinking question mark. It's a high-stakes game of wait and see, and the outcome will have a profound impact on the future of crypto. Adding to this potent cocktail of fear is the data coming from the derivatives market. The 24-hour liquidation figure stands at a staggering $294 million. That's nearly a third of $1 billion in leverage positions being wiped out. This cascade of liquidations creates a vicious cycle where falling prices trigger more liquidations, which in turn pushes prices even lower. It's a brutal, unforgiving process that can quickly spiral out of control. The Fear and Greed Index, a popular sentiment indicator, is currently at 16, which is firmly in the extreme fear territory. This tells us that the market is in a state of panic. But as we'll discuss later, extreme fear can also be a powerful contrarian indicator. The bravest and most successful traders are often those who are willing to buy when everyone else is selling. Now let's get our hands dirty with some technical analysis. This is where we tune out the noise of the news and listen to what the market itself is telling us. We're going to look at the charts, the indicators, and the patterns to try and decipher the market's psychology. And we're going to do this for our three distinct trader archetypes. If you're a short-term trader, you live in the fast lane. You're a scalper, a day trader, an adrenaline junkie who thrives on volatility. You're looking at the 1 hour and 4 hour charts, and you're interested in the immediate price action. Right now, the key metric for you is liquidations. In the last 24 hours, we've seen $294 million in liquidations. That's a lot of traders getting wrecked, as the kids say. The largest single liquidation was a $10.5 million long position on Bybit. This tells us that the market is ruthlessly punishing overly optimistic traders who are using too much leverage. The Fear and Greed Index is at a chilling 16, which is deep in extreme fear territory. For a contrarian scalper, this is a flashing light. When everyone is scared, it can be a good time to look for quick oversold bounces. Your trigger for a long trade would be a break and retest of a key resistance level on the 4-hour chart, say around $79,500 for Bitcoin. You'd be looking for a quick scalp, not a long-term relationship. Your stop loss would be razor tight, just below the recent lows. For a short trade, you'd be looking for a rejection from that same resistance level, with a target of the recent lows around $75,000. The open interest is at $109 billion, down 1.45%. A decrease in open interest during a downtrend can sometimes signal that the trend is losing momentum, as positions are being closed. Keep a close eye on that. A sudden spike in open interest could signal that new money is entering the market and a more significant move is imminent. As a swing trader, you're a patient hunter. You're looking at the daily and weekly charts. You're not concerned with the hourly noise. You're looking for the bigger swings, the major trends. The key level for you to watch on Bitcoin is the $75,000 support level. We've tested this level multiple times, and so far it has held. A decisive break below this level on the daily chart would be a very bearish signal and could open the door to a further drop towards the $68,000 level, which some analysts from Compass Point are calling the potential bottom. Your trigger for a long trade would be a strong bounce from the $75,000 support, confirmed by a bullish candlestick pattern like a hammer or an engulfing candle on the daily chart. Your target would be the next major resistance level, around $85,000. The Relative Strength Index, or RSI, on the daily chart is currently at 43.14, which is in neutral territory but leaning towards oversold. A dip into the oversold region, below 30, could be a strong buying signal for you. The Altcoin Season Index is at 39, which is also neutral. This suggests that neither Bitcoin nor altcoins have a clear advantage right now. You're in a waiting game, looking for a clear signal of the next major move. You're not trying to catch a falling knife. You're waiting for the knife to hit the ground and start bouncing. If you're a long-term investor, you're a stoic. You're playing a completely different game. You're looking at the weekly and monthly charts and you're thinking in terms of market cycles. The current downturn, while painful, is not unprecedented in the world of crypto. We've seen these 40 to 50% corrections many times before. They are a natural part of the crypto market cycle, washing out the excess leverage and speculation and setting the stage for the next phase of growth. Your main focus is on the long-term fundamentals. Are more people using crypto? Is the technology improving? Is institutional adoption growing? The answer to all of these questions is a resounding yes. The recent approval of Bitcoin ETFs has been a game changer, with a net inflow of over $54 billion so far. That's a massive amount of institutional money entering the space. And it's just the beginning. Your strategy is simple and elegant. Accumulate on the dips. You're not trying to time the bottom perfectly. That's a fool's errand. You're dollar cost averaging into your positions, buying a little bit at a time as the price goes down. You're looking at this as a long-term investment, and you're confident that in a few years, the current prices will look like a bargain. The current extreme fear in the market is your best friend. As the legendary investor Warren Buffett famously said, be fearful when others are greedy, and greedy when others are fearful. This is the time to be greedy, but in a smart, disciplined, and unemotional way. You are buying a piece of the future, and the future is rarely on sale. So, how do you trade this market successfully without losing your shit or your sanity? It's not about having a crystal ball, it's about having a solid plan and the discipline to stick to it. Here are some strategies for each of our trader types. For the scalper, master your indicators. Whether it's the RSI, the MACD, or Bollinger Bands, you need to know them inside and out. But don't clutter your charts with too many indicators. Choose a few that you understand well and that work for your strategy. The goal is to have a clear, uncluttered view of the market. Use a tight stop loss. I can't stress this enough. The market is volatile and a trade can turn against you in the blink of an eye. Don't be a hero. If a trade goes against you, get out quickly. A small loss is much better than a catastrophic one. Your stop loss is your best friend. It's the safety net that allows you to trade another day. Focus on liquidity. Trade on high-volume exchanges and pairs to ensure you can get in and out of your trades easily. Low liquidity coins can be a scalper's nightmare, with wide spreads and slippage that can eat into your profits. Stick to the major pairs like BTC/USDT and ETH/USDT, where there's always a buyer and a seller. And don't overtrade. It's easy to get caught up in the excitement and make too many trades, chasing every small move. This is a recipe for disaster. Stick to your plan and only take high probability setups. Quality over quantity is the name of the game. Have a daily profit target and a daily loss limit. Once you hit either one, walk away. The market will be there tomorrow. For the swing trader, be patient and let the market come to you. Your biggest asset is your patience. You're not trying to catch every little wiggle. You're waiting for the big juicy waves. Don't chase pumps or panic sell dumps. Let the market come to your predetermined entry levels. The best trades are often the ones you have to wait for. Use multiple time frames for a holistic view. Use the weekly chart to identify the overall trend, the daily chart to find your entry and exit points, and the 4-hour chart to fine-tune your timing. This multi-time frame analysis will give you a much more complete picture of the market and help you avoid getting caught on the wrong side of the trend. Manage your risk like a pro. This is what separates the amateurs from the professionals. Don't risk more than 1 to 2% of your capital on any single trade. This will ensure that you can survive a string of losses without blowing up your account. It's not about being right all the time. It's about making more money when you're right than you lose when you're wrong. And keep a trading journal. This is one of the most underrated tools in a trader's arsenal. A trading journal is where you record your trades, your reasons for taking them, and the outcome. It's a powerful tool for self-reflection and improvement. By reviewing your journal, you can identify your strengths and weaknesses and refine your strategy over time. For the hodler, dollar cost averaging is your superpower. This is the most powerful tool in your arsenal. By investing a fixed amount of money at regular intervals, you take the emotion out of investing and ensure that you're buying at a good average price over time. It's a simple but incredibly effective strategy for building long-term wealth. Have a long-term vision and unshakable conviction. Don't get shaken out by short-term volatility. Remember why you invested in crypto in the first place. Is it the technology? The potential for a new financial system? The hedge against inflation? Whatever your reasons, write them down and remind yourself of them when the market is in a panic. Your conviction will be your anchor in the storm. Secure your assets like a digital fortress. If you're holding for the long term, don't leave your coins on an exchange. Exchanges can be hacked and they can go bankrupt. Use a hardware wallet to keep your assets safe. It's like having your own personal Swiss bank account. Not your keys, not your crypto. It's a simple rule, but it's one that can save you from a world of pain. And stay informed, but don't obsess. It's important to stay up to date with the latest developments in the crypto space. But don't obsess over the daily price movements. It will only lead to stress and emotional decision making. Check in on your portfolio once a week or once a month. Trust in your long-term strategy and let it play out. So there you have it, a deep, comprehensive dive into the current state of the crypto market. It's a challenging time, no doubt about it. The fear is real and the uncertainty is palpable, but it's also a time of immense opportunity. Whether you're a scalper, a swing trader, or a hodler, there are ways to navigate this market and come out on top. The key is to have a plan, manage your risk, and stay informed. Don't let the fear paralyze you. Instead, use it as a signal to be cautious, to be disciplined, and to look for opportunities that others are too scared to see. What are your thoughts on the market? Are you buying, selling, or just watching from the sidelines? What are your favorite indicators and strategies? Let me know in the comments below. I read every single one, and I love hearing from you. And if you found this video helpful, do me a favor and hit that like button and subscribe to the channel. It really helps the YouTube algorithm to share this content with more people, and it allows me to keep creating this content for you. Until next time, trade smart, stay safe, and I'll see you in the next episode of Boni's Life.